morning, Charles. Welcome.
Thanks for having me.
Well, I know you and I know you're fun, but I wanted to introduce you to our audience. Yesterday, at this time, exactly at 9:30, you were ringing the opening bell of the New York Stock Exchange to introduce the first international ETF.
Yes.
Is that right?
Our first international.
Your first international.
Yes.
So, can you tell us about your fun and
Sure.
how did you feel while we were at the balcony?
Well, it's not something I ever expected to do, to be ringing the opening bell, to be honest. And the fund is TrimTab's International Free Cash Flow, and the basic premise behind the fund is that the design purpose of any business is to grow free cash flow. So if you're not growing cash, you're not doing well in business. So these are the companies in the 10 largest non-US markets that are growing free cash flow the most rapidly growing companies in the 10 largest non-US markets on the planet Earth. So if you want non-US exposure to rapidly growing companies, FCFI provides that.
So those are 9 countries, right?
10.
10 countries. Japan, I think, Germany,
Japan,
Switzerland.
in Asia there are 4, Japan, Korea, Hong Kong, Australia. In the Americas there's Canada. And in Europe there's 5 countries. There's UK, Switzerland, Germany, France, and Netherlands.
So for the non-US assets, we're going to follow you, but I know you're also an expert in the US economy, US equity markets, which will bring me to my next question, which is the highlight of the day and of the week, the GDP. The GDP came today for the US.
Well, it didn't. It was you got to remember, we're now at the end of June.
Yes.
And they are reporting data for the first quarter ending March.
That's right.
And it's garbage data in, garbage data out. It's all based on surveys. 70% of GDP is based upon consumer spending. There's no income. And the survey, and it's based on surveys of retailers. So everybody talks about GDP like it means something. So they survey several thousand retailers every month to come up with GDP, and then they add imports, exports, inventory, all kinds of nonsense having nothing to do with income, nothing to do with cash. So I've told the government and why don't you track spending like they've never heard of Visa or MasterCard? Visa and MasterCard sell real-time data on consumer spending. You can get it daily, weekly, monthly, and they sell it for $500,000 a year, and they won't sell it to me. You know why they won't sell it to me? Because they know I'll publish it, and I'll have a much more accurate version of GDP than the government does. But everybody looks at the government number like it means something. And the bottom line is, even if you look at the government numbers, yes, the first quarter has been weak, and maybe there's some seasonal problems with the numbers. But the truth is the U.S. economy is barely growing. It's growing about 2% a year, and that's even after trillions of dollars of stimulus, of zero interest rate money being created by the central banks. And now Europe, which is not growing, has created billions of euros of new money, and Japan. And without depreciating the euro, without depreciating the yen, Japan and Europe wouldn't be doing anywhere near as well, and they're not doing that well.
That's true. Well, survey or not survey, the world's largest economy shrank 0.2, minus 0.2, and then the previous number was 0.7, and that alarmed everybody, and that was concerning a little bit. But for Yellen, for Fed, we took this number. What did we have? We had CPI that came last week. Then we had the retail numbers. Then we had the non-farm. And non-farm payroll came really good surprise. CPI is coming, getting along, improving. Retail was really good. This number is a little better. So everyone is right now looking at September and if the interest rates are going to go up. This is the major question, the $1 million question of the Wall Street, as you know. Well, I know you don't really care about this number, the data, but Fed does.
Well, I've been saying all along, the U.S. economy is not growing fast enough to sustain any interest rate increase. That doesn't mean the Fed won't increase by a quarter point at some point. I don't think it's going to be this year. One of the Fed governors said it's only a 50-50 chance. I don't see the growth. There is no growth. We track a lot of real-time economic indicators. We have our own Trim Tabs macroeconomic index of real-time indicators, and it's been flat all year. Last year it grew by 2%, not exactly great growth. This year it's flat, no growth in our real-time numbers. So the U.S. economy is not doing very well. They can't afford to raise interest rates, and you know why they can't afford to raise interest rates? The only thing that the central banks have done effectively is raise prices of stocks and bonds. And if the stock market cracks when they raise interest rates, you think they're going to stay, oh, wait a second, we should raise more and have everybody, the only thing that's worked is higher stock prices. So without and if higher interest rates crashes the market, they're going to reverse their course very quickly. And I don't think they're going to raise rates this year anytime soon.
So you're on that group of people, because I think Fed is stalling. I wanted to ask your opinion too, because now there's like two groups of people. One group of people think that it's going to be December. The other one is saying September, because at each FOMC, we see the number of Fed officials, members, increasing in terms of just do one increase, one hike.
But let me ask you a question. When was the last time any Fed official accurately predicted what was going to happen to the U.S. economy? For 4 years, they've been saying, we're going to start growing soon. Very soon, we're going to be growing very rapidly. And all the nitwit economists in the world all agree with the Fed, and they've all been wrong, and they all collect their paychecks, and they're not embarrassed to collect their paychecks for being wrong. So, yes, stock prices have gone up, so no one cares that they're wrong.
And is there going to be even an impact? Merrill Lynch Wealth Management head Ashwin Chabra said that everybody's concerned about when Fed is going to increase the rate. Well, why don't you ask the question when they're going to end the whole increasing the rate and how much? Because they're going to do it very gradually, minimally. And
if they
didn't
do
the
it,
stock market price it in already?
No.
No.
No.
Okay, so what's going to happen?
Well, they're not going to increase, because if they raise rates, the market's going to crack.
Do you expect an adjustment like Bank of America, Merrill Lynch said, Goldman Sachs, Deutsche Bank, they're all putting their reports out there. They're talking about this 10%. Do you think that there's going to be a 10% adjustment to S&P?
Well, if they raise rates, yes. And the Fed cannot handle the stock market going down. They will not let that happen. It's the only good thing that the Fed has accomplished is creating a bubble in the stock market, a bubble in the bond market. Europe saw how great a bubble we were creating, so now Draghi is doing QE. The Japanese central bank is doing QE, and there's no economic growth. There's no sustainable economic growth. Look, higher interest rate. If the U.S. economy did start to grow at 3-4%, of course higher interest rates are important. But at a 2% rate, and without this, all the the zero, we wouldn't have 2% growth. You know, people are talking about, oh, housing sales did well. But you look at the numbers that they're talking about was before mortgage rates went up. The sales increase was when lower mortgage rates. Let's see what happens when mortgage rates are now 100 basis points higher than they were a couple of months ago when we had these big numbers. I don't think we're going to see such great housing numbers. The employment numbers look good on the surface, but they're also surveys. They survey 150,000 employers, the Bureau of Labor Statistics, 150,000 employers once a month. And they get maybe 100,000 responses. And there's millions of employers out there. So from 100,000, they make a guess. And then they say, well, if you were working part-time at one job for 2 hours and working at another job for 4 hours a week, that's 2 jobs.
When I listen to you, I hear, guess who? Robert Schuller, who said, even though Yellen says, oh, housing sector improved in the FOMC last week, he says that there's a bubble also. In addition to all the bubbles you counted, there's a bubble in San Francisco in the housing market. Robert Schuller, the creator
of San Francisco,
yes.
yes. I live there, and all the
I was going to say.
All the
prices are increasing, but people buying?
Well, prices are increasing because you have incredibly high valuations of companies that have not yet gone public. There's billions of dollars in private equity looking for the next Google. So Uber, all these apps have outrageous values. It's very similar to the 90s when you had all these web,
The tech.
the tech, you know, the flowers.com
Oh, yeah.
and petwaste.com, what all these various that never created any real revenues and went bust. So you have billions of dollars of valuation for companies without any real cash flow. Remember, the design purpose of business is to create cash flow. These businesses, the design purpose of these businesses is to get funding from venture capital so the guys can go buy fancy houses in the Bay Area.
Well, I was going to say, in addition to the housing bubble and the way that you sound just like Robert Shur, you also sound like Christian Lagarde, the head of IMF. She said, no, don't increase the rates 2015, increase them in 2016. Which brings me also to, Christian Lagarde, to Europe right now. I'm thinking you said Draghi and the Grexit, Greece. We are talking about that because she said also, the emergency loan is a must. It's a necessary. Is it? Are they going to save them? We have what, 24 hours now? The whole U.S. market is concerned about it. Why? And are they going to save them?
Well, they're concerned about it because there's a concern that there might be a fall. You don't know what's going to happen
From the EU?
in the EU. But the truth is that the most important thing any government can do is support growth. So in the real world, in real time, growth occurs when something new happens. And more new happens than old closes down. Right now in Europe and in the United States, it's very hard to start something new. You can't start a new business in Europe. You can't in Greece. Certainly can't unless you're doing black market. You can't start a business in Europe. It's very hard. They make it harder and harder to start businesses. They tax more and more. They regulate more and more, and they wonder why there's no growth. Government should be concerned about growing the economies and not growing the stock market, not growing free money, not growing the bubbles and assets. And instead, who knows what they do.
Yeah, and they're talking about austerity and the reform packages. But does it worry you, the impact on the U.S.?
No, not on the U.S., but I think the euro is designed for failure. The underlying for the euro was that there was going to be some kind of political combination in Europe, and there's going to be some economic combination. So all there is more and more bureaucrats making more and more money, increasing pensions, increasing the people on the dole, and governments are printing and the central banks are creating money out of thin air to pay for this. When will the people in the world understand that newly created central bank money is worth nothing? It's like the emperor is naked, but everybody's, but the emperor has beautiful clothes. Look at the stock market. Look at this. And things are going to start growing. Warren Buffett says, don't bet against America. The America today is not the America of 50 years ago when more businesses were starting than closing. In America today, more businesses are closing than starting. This is not growth.
Talking about another emperor, you said emperor, Chinese emperor. Yesterday there was a news at the Bloomberg Business, and they said that the world's largest economies, which is in your ETF, not U.S., but Germany, Japan, they're going to be impacted by the slowdown in China, the demand. It's been helping their exports and everything, but now we see a huge slowdown. Does China worry you?
Well, China, in essence, is, in my opinion, the Chinese banks are bankrupt. I was in Japan in 1990, and the Nikkei was like 40,000. And I was saying, wait a second, all these banks have more than 3 times their capital in real estate. And the real estate market in Japan looked like it had to collapse. There was so much new construction and so little tenants and so little sales of the really expensive stuff being built in Japan in 1990 that it had to bust. I couldn't, and so when I was walking around talking to smart people in Japan, they said, I'm an American. I don't really understand what's really going on in Japan. Well, China's the same. All their banks are stuffed to the gills with real estate loans, and these are empty homes, empty shopping centers, empty office buildings, and the banks have that debt, and the debt is way more than their capital. So can the Chinese government bail out every bank? Maybe. But then who's going to bail out the Chinese government?
Oh my, I want to ask you so much more, but my producer is telling me our time is up. It is never enough with you. I want to talk more and more and ask more. Thank you so much for coming, Charles. It's a pleasure. We need to take
Pleasure
you
is
to
mine.
Turkey for a vacation
Okay.
with our producers.
Okay.
Evet Özlemciğim, sohbetimiz burada sona erdi. Söz tekrar sizde. New York'tan İstanbul'a veriyorum.